All right, thank you. And I really made my presentation very basic as to what SBA has to offer as far as our lending programs, because I wanted you to get a feel for what kind of businesses are eligible. You know, we have probably a dozen different lending programs. I don't have them all listed here. So if you have questions down the road, I also left my business card on the table. Feel free to call, email me. That's what I do every day. SBA basically deals with just about every bank in the state of Oklahoma, as well as some credit unions. I will tell you that although we have participating agreements with a lot of the different lenders in Oklahoma, there's a few that are a lot more active than others and actually know the programs a little bit better than others. So you may actually run into a bank and say, oh, you know, I'm interested in getting an SBA loan, or one of your clients might, and they'll be like, well, you know, we really don't do SBA. Well, they may actually do SBA, but there may be someone within that particular bank that knows the program better than someone else. So if you run into that situation with a client or a customer, feel free to give me a call and I can let you know who those individuals are at the different banks in Oklahoma that can help them as we go through the process of SBA loans. First off, why would somebody even consider doing an SBA? Well, these are kind of our top reasons why a client or a customer might want to look at an SBA guarantee, or why a bank might want to actually put a guarantee on a loan that they might not want to do otherwise. We all know most lenders don't do startup companies. Too risky, you know, and with the SBA guarantee, we can mitigate that risk for the lender so that they're able to go out there and entrepreneurs are able to create businesses that hopefully down the road are going to be successful. Weak collateral is probably the top reason you might see an SBA guarantee attached to a loan. You know, a lot of service businesses don't have a lot of collateral. You know, you look at a janitorial service or something along that line, perhaps even a construction company that's been around for a long time. You know, what do they mainly have as collateral? They have their machinery, equipment, you know, which, you know, when we look at collateral value of a loan, or a lender looks at collateral value of a loan, there's really not a lot there, because, you know, we look at what it's going to be sold for if that business goes into default. And usually that's about 50% of, you know, what it's bought for when it's new. So there's not a lot of collateral, and SBA as a whole cannot turn down a loan simply because a borrower does not have strong collateral, you know, and most banks are going to want to collateralize those loans, you know, 100% or more. So that's a lot of times, you know, why a lender would attach a guarantee to a loan. Longer repayment terms. You know, you have your lines of credit. Most you know, construction companies and whatnot, you know, when they go out and get a loan, a lot of times they're looking for a line of credit. Most lenders these days are only going to go 5 to 7 years. If a borrower needs it, banks with an SBA guarantee can go outside their own lending policies and actually increase a maturity to 10 years on a line of credit, which, you know, benefits the borrower tremendously, because then they have longer repayment terms, so their payments are going to be less, and hopefully they'll be more successful that way. And then unfamiliar industries. We all know there's a lot of creative people in the world today, and they come up with a lot of neat ideas, but banks sometimes aren't willing to lend on neat ideas that they don't understand. So we've done a lot of strange things with SBA guarantees. We've done sliced peanut butter, and we've done turtle farms, and we did a circus elephant at one point years back. So you know, if a business has a need, we try to meet that need with an SBA guarantee. I didn't realize there was noise, so I apologize. Woohoo! Basically, ineligible businesses. There are certain types of businesses by our statutes that we cannot lend to. So I thought I'd cover those real quickly in case you have customers or clients that fit into those. You'll know, you know, they're not going to be eligible for an SBA guarantee. We cannot assist nonprofit entities. We can help for-profit entities that might be associated with a nonprofit. So let's say you had a church, you know, church would be nonprofit, so we couldn't, you know, lend to a church, but if they had a for-profit daycare, we could assist them with an SBA loan. So it does have to be a for-profit business. Businesses engaged in lending, you're probably not going to see that in your, you know, realm of the world, but that would be like your check into cash places, you know, where they do the majority of their, or they get the majority of their revenues from lending to other individuals. We can't assist those types of businesses. The biggie we get a lot of questions about are passive holders of real estate or chattels. Mainly that relates to investment. We're in the we're in the world to try and help create an economic environment, create jobs, that type of thing. We're not out to assist individuals who are trying to invest. So we get a lot of calls for flip your house, you know, a lot of house hunters and all this on TV now. Everybody wants to go in and buy a house and renovate it. And we get a lot of call for individuals who are wanting to borrow money to go buy the house and renovate it. Unfortunately, that's investment. SBA couldn't help them out. Another big one that runs into that category would be individuals that want to go buy strip malls and lease them out to operating companies. That would be more considered investment, and again, we couldn't assist those individuals or those types of businesses. We could help the businesses that are going to locate there, but we couldn't necessarily help the strip malls, landlords. Life insurance companies, businesses in foreign countries, pyramid sales. We can't lend, you know, to buy inventory for your Mary Kays or your Arbonnes or Amways or anything like that. Businesses engaged in gambling. As you all know, they don't need us anyway. They do probably have a bigger budget than we do. Illegal businesses. I'll put that up there just in case you don't know. We can't help people that are not legal. Businesses restricting patronage, and that could be on the versus of whether it's ethnicity or gender. Example on gender, Curse for Women franchises at one time were not eligible because their services are mainly geared toward women. We were able to work a deal with the franchisor, and he came in and actually changed up his agreement so that his franchisees could be eligible for SBA, and made it to where if they put a men's restroom facility in a Curse for Women's franchise, they would then be eligible for our programs. So it has to be open, you know, to all genders. I'm not sure what the new, you know, rules on, you know, other things mean regarding that, but and then ethnicity. For instance, at one time we had an application come in for a cultural center, which would have been eligible, except that the management was going to limit membership to a particular Native American tribe, which closed it off to the entire public. So then again, it was not eligible. Co-ops. Yeah, we don't get a lot of call for co-ops unless we go out in western Oklahoma, but consumer and marketing co-ops are not eligible, producer co-ops are. Businesses engaged in loan packaging. If you're out there trying to assist your customers and they're trying to package a loan over here for Tony, or trying to package a loan for HUD, or, you know, that's what they do for a business, they're not eligible for our programs as well. Yes, sir?
What's the explanation of a producer co-op?
A producer co-op, and you would ask me that. A producer co-op is, I believe, one that's where they own part of it, but they're actually, you know, making a revenue off of the co-op itself. Whereas it's not. The consumer and marketing co-ops are ones where you have little bitty individuals that all own a piece of it, and those are not eligible for our programs. Does that make sense?
Yeah, we have a trucking consortium that's a DBE.
Okay. It's possible. It's a trucking co-op. Okay. What do you know? What is it? A producer? I can get you a little bit more detail on the definition of that, and I will definitely do that. Yes, sir.
Is there any limitation on online businesses?
No. We do a lot of online businesses. Yep. In fact, I'm working with one right now. Some individuals that are trying to start an online gift basket company. But no, we can definitely do that. There's no problem, as long as they're in the country, headquartered in the country.
And they're limited within the income level for small businesses.
Yes, exactly, as long as they're considered small. And we're going to talk about that here in just a second. Absolutely. Business owners of poor character, again, I guess that's like a legal companies. You know, we want people to be able to pay us back, and we know that they're going to have the character to do so. Now, when you say that, we do have questions, you know, on our application, such as, have you ever been on probation, parole, or, you know, have you ever been arrested or convicted of a crime, blah, blah, blah. Generally, if someone is on probation or parole, they're not going to be eligible for SBA programs, and that's probably true throughout the government. If, however, they have been arrested for a crime and they have served their time and they're off of probation and parole, they can still be eligible for SBA. They just have to go through certain steps where they provide us information that we send through the FBI to make sure they, you know, have done everything they need to do and they're good people now. And they can be eligible. The only time that is not true is if someone has been convicted of what they call a white-collar crime, embezzlement, forgery, something along that line, and then they're ineligible as it is. They just can't make it. So it was real interesting the other day. I had a call from a gentleman who'd just gotten out of prison. He'd been in for 25 years for murder. He just finished his parole, and yes, he's now eligible for SBA if he can find a bank. But you know, had he been in there for forgery, he would not be eligible. So, I don't. Interesting. Yes, sir.
If an owner already got the loan
Mm-hmm.
from SBA
Mm-hmm.
and then got convicted, so are you going to take him out?
Well, actually, that's the question is, and I need to repeat this: is if the owner already had an SBA loan and then he had an issue with the law, is that what you're saying? Would we call the loan? And really, that's going to probably be a question for the bank. Generally, what happens is we start calling that an adverse situation. The bank's going to notify us that this has happened, and then we will allow our servicing offices to make that determination whether that note's going to be called. Because obviously if he's in prison for something, he's convicted, he's not going to be making payments to us anyway. So at that point, then they will probably call that note, I would guess. Businesses where lenders have an equity interest, you're never going to run into that. I've only ran into it one time, and basically that means if you have like a bank president who wants to go into town and start a boutique with his wife, he can't go through his bank to get an SBA loan. Prurient sexual material. Okay, anybody have any idea? Prurient? Anybody know what that means? Okay, I looked it up. I had to look it up, unfortunately, when I started doing these presentations. Basically, it means immoral. It would be your like gentlemen's clubs and your Christie's toy boxes and things like that. Anything that has some kind of immoral situation attached to it. Prior loss to the government. If you defaulted on any type of governmental loan, whether it be HUD, USDA, probably short-term lending programs through ODOT, do what? Student loans, absolutely. You're not going to be eligible for an SBA loan until that is repaid. And a lot of times I do have individuals that come back and say, oh, well, you know, I had a loan, but it was charged off, so I don't owe the government anything. Well, even though you've had a loan that's maybe charged off, that still sits out there, and the government knows it's there, and they say, well, you know, we're not going to give you another one until you pay that money back. So political or lobbying activities, never run across that in my life. And speculation. Speculation's big in Oklahoma because of the oil and gas industry. Basically what that means is, you know, we can't lend you money to go out and say, you know, oh, I see this hole, I'm going to go get billions of gallons of oil out of this hole. I'm speculating I'm going to make a lot of money. Not eligible because we really don't know that you're going to be able to do that. We can do lending on proven sites that we know have proven oil revenues. Okay, as the gentleman mentioned in the back, there's requirements for being and getting a small business loan, mainly being that you're a small business. Normally it doesn't impact very many people in Oklahoma because anywhere from 94 to the last figure I heard was 96 companies in Oklahoma are considered small, 96%. So you very rarely ever run into someone that doesn't meet the size standard to be considered for SBA loans unless you're like a Chesapeake or Devon or someone along that line. And there are size standards that are based on the NAICS code. Every type of industry has a NAICS code. I think it's 5 or 6 digit code that's assigned to them. And that code will tell you whether you're considered small. For instance, this has changed a little bit. These are kind of out of date, but manufacturing, you can have up to 1,500 employees in certain industries and still be considered small. Some industries are based on revenues, average revenues over the last 3 years. You know, retail service, there are some, and I believe it's convenience stores, you can have up to $23 million in average revenues and still be considered small. So it's really hard to meet that large business dedication. Credit elsewhere. If you can get a loan through a bank and they don't need us to put a guarantee on the loan, that's what we would ask them to do. We would want them to go out and you start that business with your own money and with a conventional loan from the bank rather than attaching a guarantee onto it. Personal resource rule, we do ask all of our lenders to look at personal financial statements of any owner that has 20% or more ownership in that company. If they have significant liquid assets, and we don't look at home equity or IRAs or anything along that line, we're talking mainly cash in the bank, CDs, stocks that are day traded, things like that. If they have significant liquid assets on their own, we would ask them to start that business with their own money rather than attaching a guarantee to it. Okay, how does an SBA loan work? Basically, when you go in and get an SBA loan, a lot of people think we're doing direct lending. We really don't have money per se to lend. What we're doing is we're providing a promise to the bank that if this business doesn't pay you back, you can then come to us, ask us to buy the guarantee, and we'll pay you back a percentage of what their balance is. And then we'll deal with that individual down the road. We have lenders, like I said, in the state that we work with, participating lenders. And I think at last count with branches, it was, 400 or 500 different lenders out there, with their branches. Basically, you'll go have your applicant go into the bank and you'll tell them they're interested in getting an SBA loan. They'll require everything they normally require when that person would come in just to get a conventional loan. They'll take it to their underwriters there at the bank and they'll say, yeah, we'd really like to do this deal, but there's something that, the collateral's short, we want to spread their terms out. They'll then come to SBA and ask that we put a guarantee on the loan. And the bank then gets with the customer, they complete some additional documents that are then sent to SBA. We make the decision in most cases whether we're going to provide the guarantee, and if we do, then we submit all the paperwork, say, yeah, you've got a guarantee on the loan, and the lender closes it, and the borrower really never even knows that we're, other than the paperwork he's filling out, that we're really involved. He's still the lender's customer. He's still making his payments to the lender. The only time SBA gets involved after that point is if the business goes bad, the lender asks us to purchase the guarantee on that loan. Okay, and then we'll, like I said, pay back a percentage to the lender and then deal with whatever's left. 7A Loan Program is probably the program that's been around the longest. It's kind of the stock program for SBA. Everything that we do falls as an umbrella under 7A except for the 504 loan program. Just within the last couple of years, they raised our maximum gross loan amount to $5 million. So you can see we do a lot of business for a lot of people. I think right now it's kind of surprising. Our average loan size last year was $435,000 in the state of Oklahoma, but this year we're seeing a large increase in the size of loans. So there's a lot of need out there actually for the larger deals. The maximum guarantee that any person can have at one time through SBA, regardless of if it's for multiple businesses, is $3.75 million. So if they have a loan on a business that they own, or they own a Subway shop, and over here they own a construction company, they can have multiple SBA loans on those companies, but they can only have at most $3.75 million guaranteed to the government at any one time. We guarantee 85% on our loans under $150,000 and 75% on anything between $150,000 and $5 million. So you can see how that mitigates the risk for the lender. They're at most 25% at risk on anything they lend with an SBA guarantee. Oops, I went too far. Use of proceeds, like I said, we can do anything business related. We can buy buildings, we can construct buildings, we can do leasehold improvements on space that a business is leasing, machinery, equipment, furniture, fixtures, working capital, and we can refinance loans that they currently have with their lenders. If perhaps they got them, 5-6 years ago when interest rates were higher and they want to come in and refinance with an SBA loan, perhaps we can reduce their interest rate by getting an SBA and then help with their payments every month. Maximum loan terms, we can do up to 10 years on working capital. We do ask that lenders tell us why they have to be over 7, but generally it's just because they need it to cash flow. Simple explanation. We can go machinery, equipment, furniture, fixtures, and real estate for 25 years. So we can do lengthy loans. Although, you do see it says shortest reasonable term and limited to the useful life of the asset. We don't want to go 25 years on a dental chair. So we just want to know that's only going about as long as the chair is going to last. But real estate, we can go 25. We do normally caution the lenders and say, don't take it out 25 years. Do it 24 and a half, because that way, in 25 years anything can happen, and there may be a time where you need to defer a payment for a couple months. If you're already at 25 years, you have nowhere to go to help that customer. So do it 24 and a half so that they have a little bit of leeway to help them out. Interest rates, I think we're pretty competitive with the banks on if they just walked in to get a conventional loan. These are our maximum rates. This is not what the lenders have to charge. So if you have a loan with a maturity of less than 7 years, they can charge up to 2.25% over prime rate. They can be variable or they can be fixed rates. Most lenders will do variable. Some don't even know they can do fixed until they call us. We're like, oh yeah, you can do a fixed rate. Most banks don't do the max. They don't go to the 2.25. They'll look at kind of what the package is of the person, that's come in and borrowed. If they've got good credit and everything else, they may negotiate with them and say, hey, we want a 2% over prime. So these are just where we max it. We don't allow them to go over these percentages. 7-year or more maturity, 2.75, 2% if it's a loan on top of that. If it's a loan less than $25,000, or 1% on top of it if it's between $25,000 and $50,000. But like I said, those are negotiable. Okay, what do we look at when it comes to us? Same thing the bank looks at. We want to make sure they can manage the company. We want to make sure they have cash flow. That's our biggie. That's what we're interested in. We want to make sure they can pay us back out of the money that they're making for the business rather than out of their personal pocket. So if it's an existing company coming in and asking us for funds, we're going to basically be looking at their past earnings records for the last 3 years. We're going to look at their tax returns. We're going to look at income statements and balance sheets for within the last 90 days. If it's a startup, we're going to look at their projections, and hopefully they're realistic projections, and we do try to caution the lenders to be sure that they're realistic because entrepreneurs are very, very enthusiastic. Back when we were actually processing loans, I had one come in for a Simple Simon's Pizza franchise, and I thought, wow, they're going to make a lot of money. They're go-getters. Well, when we actually looked at the demographic of the area that they were putting it in, it was a real small town. They would have had to sold pizza every day to everybody in town to actually make that projection. So we kind of said, that probably isn't going to happen. Can you go back and make some changes? And they did, and they were approved, but it's just, we try to make sure they're realistic. And I would say between existing and startup, we're probably about 60% of existing companies are funded through SBA versus about 40% startup, and it varies every month. So we pretty much 50-50. Character, again, we do that on the 912 where it tells us if they've been arrested. Credit, we are not credit scored lenders. We have one program that actually credit scores, but all the others we don't credit score. Basically what we do is we try to look at it on a case-by-case basis. We'll have the lender explain to us why the credit's bad, if it is bad, and then we'll take a look and say, okay, is it justified? Is there a reason that their credit's bad, or are they just making slow paying on their bills? Did they have a medical situation where they have a lot of stuff showing up? It's possible they can still get a loan even with some derogatory credit. Again, these top two bullet points kind of go against each other. SBA loans must be collateralized to the fullest extent possible, but we're not going to turn it down simply because it's not there. So if a borrower comes in and they have a really complete package, it looks good, but they just have nothing to put up as collateral, we can't turn them down because of that. We just take whatever they have. Otherwise, if they come in and they have a package and they have a lot of things to offer as collateral, we have to secure it in the government's interest to 100% if we can. So if what we are buying for the business assets don't actually collateralize that loan, we then go and look at their personal financial statement and see if there's anything that we can attach to. I will tell you that with most SBA loans, 7A loans, we do end up taking a second position on their home, which kind of scares people off, but I'll be honest with you, the whole time I've been with SBA, I've seen them go after a home one time throughout the nation, so it doesn't happen very, very often. And we do require personal guarantees on any owner that's 20% or more. As with all government programs, there's fees involved, and we're no different. We do have guarantee fees that the borrower pays to help obtain the guarantee on the loan. It can be paid by the lender, and we do have one lender in the state that will sometimes pay the fee for some of his good customers. But the fee is 2%, and this is on the guaranteed portion of the loan. The part, like if you got a $100,000 loan, it's guaranteed it'd be guaranteed at 85%. So the 2% is going to be on that guaranteed portion. It's not going to be on the $100,000. And it can be, unlike your program, it can be worked into the loan as working capital, so you can roll that fee into the loan. The good thing about the guarantee fee here in Oklahoma is we are like one of 2 or 3 states that actually provide a state tax credit for the guarantee fee that is paid on an SBA loan. So if you wind up paying a fee, and I don't think I have it on here because it's too scary, but if you wind up paying an astronomical fee on a $5 million loan, you can take that as a full state tax credit on your state return. And those are quite high. I can't remember the last figure on a $5 million loan, but it's high. And you have up to 5 years to do that. So if you're an existing company and your tax return looks good one year and you don't want to take the credit that year, you have 5 years to carry it forward. So it winds up being a wash for Oklahoma, which in some other states it doesn't. This is one of the smaller loan programs we have. To try and make it easier for some of our lenders that don't do a lot of SBA, we tried to make some of the paperwork a little bit less cumbersome for them on some of our smaller loans. So we have something called Lender Advantage. Those loans go up to $350,000, still the same 7A rates and the percentages, and the application is streamlined. So basically when you do a 7A loan through a bank, you're never going to see it, but when the lender sends it to us, it's probably about this thick paperwork, because what we're doing is we're asking for your last 3 years tax returns. We're asking for, you know, franchise agreements if you're a franchise. We're asking for your 90-day income balance sheets. You know, we're asking for a schedule of collateral. There's just a lot of stuff involved with those loans. And normally on a 7A, I will say if we have a complete package, it takes about 10 working days to get an answer back from SBA. Okay? With the Lender Advantage, it takes about 3 to 5 days because all they're sending us is a 3-page application from the bank and their credit memo. So it's very, very quick. We also have something called SBA Express. Most lenders are getting involved in this program because they like it, because it's quick and they can do it online. It's a web-based application for the lender to get an SBA guarantee. It only goes up to $350,000, and because they're doing everything themselves, we're not looking at anything other than making sure it's a small company and that they're eligible for our programs, they only get a 50% guarantee. So it's got to be a pretty good customer that they're wanting to help, but the lender can actually charge a little bit higher interest rates. So the interest rates on these loans go up between 4.5% to 6.5%. But those decisions are made, once they submit that online, those decisions are usually immediate. So if you have a customer that needs quick money, and they need less than $350 and they really could care less what the interest rate is, I don't know if anybody really cares less, but if they're in a hurry to get money and they don't care about the rate, they can get money really fast through this program. Because once they hit submit, they get a loan number and the lender can go close the loan. Another good thing about this is that there's no collateral required for loans less than $25,000. You know, every other time we're going to take what we can take to protect the interests of the government. And anything over 25 up to the 350, the bank uses their own collateral policy. So if they don't normally take a second position on a home, we're not going to ask them to do that. It's whatever they normally do as a bank. This is the biggest feature, revolving lines. If you have a customer who's looking for a line of credit that's less than $350,000, this is the way to go. Because it's quick, it's fairly cheap based on the rates, and they can take it out for 7 years. So they may get a 7-year revolving line. It's renewable every year, every 2 years, whatever. And then a lot of times SBA is even allowing them to term those out. So you may go 2 or 3 years on your line and then want to term it out the remaining, 5 years or 4 years or whatever, and just make straight payments at that point in time. So it's a great program. The banks like it because, in the past, every time a bank disperses something under an SBA loan, they have to document the heck out of that. It has to be, I want this, I want that. We used it for this. Under this program, they don't have to document anything. It's just, yes, sir.
Under any of these programs, are there any prepaid penalties?
The only time there's a prepaid penalty is if the maturity is over 15 years, and then it's only if they pay back within the first 3 years. Okay. The only other one that has a prepayment is the 504 loan program, and that's because a portion of the loan sold to investors, and there are some prepays on those.
How often are they sold out?
On the 504 program?
Any of them, or are they all?
No, well, that's up to the bank. Yep. There's some banks that do participate in the secondary market, and they'll sell, you know, the guaranteed portion of the loans a lot of times, but they're few and far between. Okay. Patriot Express, exactly like the one we just talked about, except it goes up to $500,000 rather than the $350,000, and it's to help individuals within the military community. So if a banker were to have someone walk in, or if you know someone that's a veteran, a service-disabled veteran, someone getting ready to transition out of the military, National Guard or Reserve member, or someone who has died as a result, or not, I guess they wouldn't be borrowing, but the widow of someone who has died as a result of a service-connected disability, and they own 51% or more of the company, or as a total own 51% or more of the company, then they're eligible for Patriot Express. So then that rather than $350,000, they now borrow $500,000. Microloans. We also have something called microloans. The SBA doesn't actually do anything with this program other than we lend money to certain nonprofit intermediary companies in the state that then turn around and re-lend that money out under their programs. These loans go up to $50,000. We have 4 intermediaries in Oklahoma, although only 2 of them right now have money to lend. One is Rural Enterprises of Oklahoma out of Durant, and the other one is Little Dixie Community Action Agency down in Hugo. They also have technical assistance provided with those programs where they can sit down and counsel with the customers that actually get the microloans. Okay, questions on the lending programs. Do any of y'all deal with customers that actually do anything overseas, construction companies or anything like that, that they have contracts over in other countries? I just wanted you to be aware if you do, or if you have manufacturers that send machinery and equipment over to other countries to sell or whatever. We also have export and international trade loan programs. In addition to that, on the 7A, we have something called cap lines, which are lines of credit that actually go up to $5 million. So let's say you had a contractor who has a contract with the federal government, doesn't matter really what kind of contract it is, they can actually obtain a loan through one of our participating lenders for up to $5 million to help assist them in fulfilling that contract. Okay, and the contract itself is taken as collateral. We take an assignment of the contract as collateral, so they're not really putting up a lot of other assets that they can use to go out and collateralize other loans. Basically, we have one called working capital cap line, which is an asset-based line of credit, and then we have a builder's cap line, and this is the only time we deal in investment. Really, we have something called a builder's cap line, so if you have builders or construction contractors that go in and build model homes, we will provide them with the money they need to build that model home for their development with the intent that it will sell in 12 months and they'll pay the loan off. That's the only time we really deal in anything along that line. We have a seasonal line of credit, so if you deal with individuals that do things on a seasonal basis, they can obtain a seasonal line of credit, and that will allow them to make the majority of their payments at a time when they're seasonal. Let's say a Christmas tree farm, they're very seasonal. They're, majority of the money, the revenue they have coming in is during the Christmas time. They can set it up to where they make a large payment to SBA and the lender at that point in time rather than spreading it out when they might not have a lot of revenue coming in. And then again, the contract line of credit. Okay, I thought I'd cover real quick, in addition to our lending programs, we also have something called a surety bond guarantee. I'll be honest with you, I'm going to be right up front. I don't know a whole lot about surety bond guarantees because we've had someone else in our office that did that who's now left, and they said, oh, go talk about it. So I did a lot of quick little beefing up right before I came, so I know a little bit about it. But if you have questions, I can definitely get those answered at a later date. But basically, what it is to, it's kind of a guarantee program, kind of like the lending program. It's to help you, but it's to help you get a bond to go in, if you need a bond to fulfill a contract, whether it's a bid bond or performance payment bond, and you're having difficulty obtaining that bond, you can go to certain different licensed companies, and I'm not sure if you guys are on there or not, but you're probably going to talk more about this to help you get those bonds through the guarantee. We guarantee anywhere from 70 to 90% of the costs incurred by the surety company if the business defaults on the contract. What is a surety bond? I'm sure you all probably know what a surety bond is, but it's just a written agreement signed by a surety company and the principal or the contractor that they're going to take care of the project owner should the contract fail. A requirement now under the Miller Act that on all federal construction projects valued at $150,000 or less, generally there's a bond requirement. So that may be a need for a surety bond. And a lot of times state, county, and local organizations now also have that same requirement. In order to be eligible for a surety bond, you do have to, again, be small. That's why we're Small Business Administration. The contract must require a bond. I don't know why you'd be going out looking for one if it didn't. And then the public or private contract or subcontract cannot exceed $6.5 million unless it's a federal contract, and then it can go up to 10. Two different types of bonds. You got your bid bond, I'm sure everyone here knows since you're mainly contracting companies, agencies, but and your performance payment bond. There is a list of participating surety companies or agents that actually provide these bonds. There's also frequently asked questions. What's going to be asked of you when you make application for the bond. There is an online application called eApp where you can apply for a surety bond guarantee through an agent. But this is the website that you can go to find out who the agents are. I think we do have one agent in Oklahoma that deals with the SBA Surety Bond Guarantee, and that's Bond Pro out of Bartlesville. These are our websites. The first one is just the SBA.gov website. The second is strictly Oklahoma's website. It'll get you to a list of lenders that are doing a lot of SBA loans, that type of thing. Questions? I knew Judy would have one. That's probably like a whoosh over my head. Yes.
The contractor line of credit
Yes.
loans historically have required a lot of work on the part of bankers. Many have been reluctant to use those. Would I be correct in assuming that the new SBA Express loan could be used for financing contracts in the same way with less paperwork?
Absolutely, as long as it's under $350,000. And I should have repeated that question. Judy's question was, normally the contract line of credit, the contract cap line, used to have a bad stipulation on it for lenders that it was very difficult to use. In fact, I never really even talked about it when I went out and talked to lenders that it was available because there were so many monitoring requirements. There was just so much information that had to be obtained from the contractor that it was kind of useless. They revamped it within the last year. They've made it a lot simpler. But Judy's question was, wouldn't it be easier to use the Express product for a contract line of credit? And yes, it is absolutely a lot easier. There's no monitoring requirements like there are still under the contract cap line. The only difference is that it only goes to $350,000. So if they're needing a line that's larger than that or larger than $500 if they're a veteran, they would have to go through that process. But it has been revamped. We have had some lenders that have used it in the past that like the new program, say it's a little bit easier, but it's still been very difficult to bring them back on board to get lenders to be doing these, because once they get, go through the process and it's not been a good thing for them, they don't want to try again. So we're having a hard time doing that. We went out about 2 years ago and actually asked all of our banks in Oklahoma who out there are doing any kind of contract lending, whether it was through SBA or not. We didn't care because we kept getting calls saying, hey, we need somebody to fund our lines. So we do have a list that we've put together. I don't know how updated it is at this point, but I'll send it to you. Okay? Yes, sir.
You had a sense of things of what Judy talked about. You had a bullet on one of your slides.
Yes.
That you talked about the technical assistance.
Yes.
And that's a really key part to some of these programs.
Absolutely.
Your larger banks, your mega banks, there's no technical assistance. When you bring your documentation in there, they expect you to gather it.
Absolutely.
But the non-traditional sources, you mentioned a couple of them, one, the farm, something about a farm bureau, which mentioned
Rural Enterprises of Oklahoma.
They have technical assistance, so if you don't have
They do.
everything together
Absolutely.
proper, they can assist you in putting the packages together. And that's what happens a lot of times. A lot of times, the businesses are in need of capital, but they'll take it to someone, even if they're the number one SBA lender in the country.
Absolutely.
They're not going to have those resources. They're going to take what you have,
Mm-hmm.
and they're going to reject it because there's something missing. But like the Rural Association and the CDFIs, they have technical assistance that will assist those contractors with
Absolutely.
putting the information together. So I usually take a lot of my contractors and I tell them they can go to your big ones, your Bank of America, your Wells Fargo, but you're better off going to some similar non-traditional financiers that offer these government programs like your, in our case, People Fund and Axion in Texas.
Absolutely. Well, go ahead, Victoria.
I should do a commercial for my colleagues at the Oklahoma Small Business Development Centers, because they do loan packaging also, and there are 16 centers located across the state, and they will be glad to help you, and there's never a charge in SBDC
Right.
for help with the loan.
Right, and they do existing and startups, so they handle the realm, and it's not just loan packaging that they do. I mean, they can pretty much help you with any aspect of anything your business is running into. And I know you guys provide some TA too, don't you, on contractual things and
We provide
to some
technical
extent.
assistance on government contracts.
Yes,
Not on finance.
not on financing, exactly. Okay, so yes, sir.
The two micro lenders you mentioned in Oklahoma, in Durant and Hugo,
Mm-hmm.
do they accept online application or any
No.
applicants needs to go there?
You don't need to go there. You can call them, and I can give you numbers if you need it. You can call them and they will send you a packet in the mail. And then you fill that out and return it back, and then they will make that decision.
That business can be anywhere in Oklahoma.
Well, yeah, I should have quantified that or qualified that. The one in REI can. The one down in Hugo, they only cover a 3-county area. Now we do have 2 others. One's in Tulsa, and it was Tulsa Economic Development Corporation. Probably within the next 6 months, they're going to be getting some additional funding up in the Tulsa area, which will cover the state. And the other, let me think real quick. I can't even remember where the other one was. Oh my goodness, I don't remember, but they also cover the state. But they have, it was in Tulsa also. It was Greenwood Community Development Agency, but they have no funding at all. They can provide technical assistance.
Okay. And I have another thing I wanted to ask you. Once the payment, the loan is paid,
Yes.
does it affect positively on that, the business?
Oh, absolutely. Absolutely. Oh, absolutely. And that's one thing we do a lot. His question was, once an SBA loan's repaid, does it reflect positively on the company? Most certainly. Just like any loan that you pay back is going to reflect well on you if you've paid it timely. And that's one of the things we do when we actually have a loan application come into SBA. We will do a search and see if you have had any other loans with us. And of course, if we've shown that you've paid us back, that makes us a little bit more apt to want to lend to you again, just as it would with any lender. So absolutely.
Sandra,
Yes, sir.
I had a contractor come in, and he's from upstate, and he was associated with a company that was debarred,
Okay.
but there was no loss to the government. They paid it back. I think what it was is they had some compliance issues.
Uh-huh.
When you mentioned that character, if they were associated in that SBA form you gave in 912, that
Yes,
software,
yes.
and that listing, does that make them ineligible?
There is a question on there if they're a principal of a company. I don't believe it's on the 912. I believe it's actually on the application. I should repeat your question for the gentleman in the back. If you've been associated with a company that's been debarred from governmental business, excuse me?
Oh, a certain agency?
Yeah, certain agency. It doesn't really even matter which one. We don't care. Then yes, there is a question on SBA applications that ask you, have you ever had that situation? And yes, it would make you ineligible. So, are they still debarred?
Yeah, well, this company's been debarred, but he told me that there was no financial losses, compliance issues,
Doesn't matter.
which I told him
Yep.
I didn't think so.
Yeah.
Even though he was not the principal owner, he was like 25% owner.
Yeah, he's a principal owner to us.
He had to put it on his history that he would work for this, that he was a part of this company.
Yeah, if he's more than 20, he's very important to us. Anything more than 20% is a principal owner. So, yes, sir.
What would be a business is quote unquote eligible, but what would be factors that make them unsuccessful in obtaining a loan?
Actually, that's also part of what I do at SBA. Anytime an SBA loan goes bad and a bank has asked us to purchase it, it goes to what's called our National Purchase Center in Herndon, Virginia. I get notified that one in Oklahoma has gone bad, and normally what I'll do is get with the bank, because a lot of times the bank is sending them documents to try and get paid back. A lot of the times what I see is Number one, if it's a startup company, they didn't get enough money at the upfront to continue to be successful through the first few stages of their life, or that the bank didn't, there may have been an equity injection required when they started, and the bank didn't make sure that that injection was actually brought to the table, and that impacted them a lot. The other thing I would say is, you know, really in Oklahoma, we're lucky the economy hasn't affected us as a lending institution at all. We've, you know, California, New Mexico, you know, Florida, it's been bad. But I would say that's probably the number one is equity, and then probably waiting too long to get a loan, to where they're in a situation now where a bank doesn't want to lend to them. That's what I see a lot. You know, they've tried to struggle, they've tried to, you know, make payments with credit cards or whatever. They get themselves into a hole just a little bit too deep that now the bank says, I really don't want to lend to you. And I've had that happen with a lot of construction companies. They want to do it on their own, and that's good, and they don't want to, you know, go borrow money, and sometimes they just wait too long when the need comes up to actually go do it.
Would a good business plan help them?
Oh, absolutely, absolutely, and that's a requirement. They have to have a business plan in place prior to getting an SBA loan, and hopefully they're smart enough that they know what's in the plan. They're not just having someone write it for them and, you know, don't even look at it. That happens a ton, as you all know. Other questions? I know I've taken a lot of time. Yes. Oh, I thought he was raising his hand. Well, you have to ask a question now. You touched your ear. Kind of like a, you know, bidding service. Well, thank you very much. I appreciate it. My cards are here. I'll be happy to answer any questions you have down the road, or, you know, email me anytime.